Let's start over here in the soybeans first, because that was the catalyst that started all this here today. Oliver, we've talked a lot about the fundamentals. Now let's talk technicals. What does today mean for the technical numbers, and what numbers do you look at for the top end and the bottom end for this market now that we've broken through that $11 ceiling?
Well, $11 is a huge level, and as Jeff alluded to, these are levels that we haven't seen for years. In fact, I think this is the first time we've broken above that $11 handle since July 14th of 2016. And if you kind of zoom things out and look where we were earlier in the year, an incredible run to get to these levels, about $3 off the low nearly. So where do we go from here? That is the million-dollar question, and unfortunately I don't have the right answer. We are kind of getting back in that overbought territory, but I think more importantly is just this momentum that we've seen from the funds in a lot of these markets, and really not just the grain sector, but if you look across the board, you're just seeing a buying spree, precious metals, indices, etc. It's like a buy first, ask questions later, as the dollar continues to get devalued here over the last several days. And the upside targets are kind of up in the air right now because we are in uncharted territory. And when we look for technical levels to go off of in terms of resistance, we want to see where the previous interaction was between the buyers and sellers. And up here at prices that we haven't seen for years, there's really not a whole lot of that. So it's almost like pin the tail on the donkey as far as finding meaningful resistance goes. Now, with that said, $11 is going to be obviously psychologically significant going forward. If the bulls can't defend $11, potentially that starts to spur some long liquidation and some selling. But the path of least resistance has been and continues to be higher for the time being.